Hey everybody, what's going on? CryptoVatsik here with another TA video for you today. Nothing of what you're about to see is considered financial advice, and they're just my opinions. If you enjoy this content, as always, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel. I got a really exciting one for you today. You don't want to miss it. Let's get right into it. Okay, today I'm going to be covering GALA Games, and I wanted to provide an update on the previous two videos that I had on it, because we've had some interesting developments since those videos, and I think things are starting to get really interesting. Now, in case you missed that prior video, here's a snippet when we were trading back here in January, and I had said that I think price was going to struggle to breach our red resistance zone. I had my ultimate resistance up here on the solid black line, which sat at about 6.5 cents for any kind of deviations above red. But my ultimate expectation was that we were going to revisit my green buy zone where we had that fair value gap. So I'll take away the snippet from that video now, and looking at the current chart, you'll notice that's precisely what we got. We in fact did deviate above red resistance towards the 6.5 cent level with our swing high right here, with the following move almost immediately losing red with a bearish underside retest for our ABC down. And there we have it. We came back down to my green buy zone. Now, to be fair, my expectation was we would get more of a chance inside of green to look for longs. But instead, on account that we tapped it, we immediately reversed back up to red, which was still currently resistance. With red being that high time frame resistance block and green being that fair value gap that we had with this candle right here, leaving a zone of untested liquidity after this prior breakout that we had down here. So if you watched that video or you followed me on Twitter, you would have known that I was going to be looking for longs within green or an account that we tap green. Now, to stay as objective as I possibly can, there is still an existing fair value gap down here. It doesn't mean necessarily that we have to fill it in, but it is something to consider moving forward from here on. So if we just stick to the high time frame still for a second, I want to point out something on the weekly time frame chart. So here we are on the weekly chart. We have a newly reclaimed structure here that has already been retested. And when we reclaimed to this level, we had our first market structure break here, we had our second MSB here, and arguably a third MSB here from this overall downtrend when price punched up. Now, I'm not saying the bull market is back on, but I'm saying from a technical standpoint, we have broken out of that bearish downtrend on a macro time frame. So this is not a move to be discounted. So right off the bat, this reclaimed level is a clear invalidation. If there's going to be any type of continuation, it's a must hold. Now, in an ideal situation, this reclaimed level will hold, but if you remember, we still have some of that fair value gap left over down here. So it doesn't mean that this area has to hold to remain bullish. We could still come down and fill that gap in, and in my opinion, would remain bullish so long as we can hold the first MSB that we had down here from this minor swing high. Now, another thing that this price action has given us is further data to work with on account that we made our swing high and we've now made our swing low. So we've got a nice range to work with here, with some really nice respect on the range EQ currently as resistance once it was lost. And as always, I'll mark out the quarter ranges right there and then right here. I like the quarter ranges at the 25 percentiles because I find there's just as much respect with them as there is with the range high, low, and EQ. And you'll notice we are currently pinched between the EQ of the overall range, yet trading above the quarter range in the bottom 50th percentile of the overall range here. So at the moment, we do still have support, and we've also got our clear resistance, which essentially gives you two pretty fundamental factors for trade criteria. If you're going long or going short, then you'd just be drilling into lower time frame, remembering we're on the weekly still. Now, one other thing I'm going to cover on the high time frame before I drill into the lower time frame is something on the monthly chart. So here on the monthly, you'll notice something. We are currently printing what looks to be a pretty major doji candle. And you'll just notice if we go back, we had two prior doji candles, here in October and here in July. And a doji candle essentially represents indecisiveness in the market, or essentially what is a battle between the bulls and the bears, which typically results in an aggressive move to follow, which of course both times on these dojis, we did see that aggressive move thereafter to the downside. Now, the difference to me here though with these two dojis was that the prior move was off of a continued sell-off. We had no breaks in market structure, and it was essentially just following the trend. What's different now, in my opinion, is we've broken market structure with this powerful move that we had in January. So the difference here being is that we've seen a rally now at this point, with a sell-off and retest of that reclaimed level down here at 2.5 cents, and then now what looks to be printing as a doji. So it's just something to note. It's not a guarantee that the next monthly candle is going to be very powerful, especially as I always say, I want to see that reaccumulation phase first. Okay, I think I've covered enough of the high time frame, so I've just flipped over to another chart. We're on the 4 hour here of GALA. And I wanted to recap the lower time frame setup and structure that I showed you in that prior video that I thought we were going to see on an account that we would lose red and drop all the way down to my buy zone like I said, which we did in fact get. Now I just want to bring up another snippet from that prior video of the 4-hour chart. And so I had said I noticed this rising wedge that was beginning to form and was being respected, and a deviation up above the wedge, and if you remember, above that red zone was fine, but I ultimately expected it to be a fake out, to come trade back inside the wedge and then eventually lose it down. So I stayed true to that high time frame analysis, and then I drilled into the lower time frame for the setup. And you'll notice right here we had the wedge. I'll just make them in bold. You can see it a bit better. So we were trading somewhere here in the time. We got our deviation above the wedge high, immediately traded back inside the wedge as resistance, came down, tested the wedge low, chopped around for a little bit longer until ultimately that wedge was lost right here, and then a bearish underside retest of that lost lower band of the wedge right here. So it's just nice to go back and reflect on previous analysis done to see either what went right or what went wrong. I think it's important as traders to do that. And if I was wrong and this just screamed further up, then I would still cover that. But at least I would have my invalidation set out to know when you're wrong as quick as possible. Now, one other thing on the 4-hour chart that I'll cover is this range that we had as well. So again, I covered this in that prior video. Here's a snippet. We had our demand zone down here in green at the range low. We had our equilibrium sitting at around 5 cents with our range high up here. On account that we had reclaimed that EQ at the time of the current price action of that video, we had reclaimed it. So I'd said, if you were bullish and you wanted to take advantage of further potential upside, if you did not agree that this was going to come down, then this is essentially that structure that I wanted to see, because it would provide the best R&R for a trade. And this would also assume a breakout of that range high thereafter. That's the only way I could have seen playing this, unless you had already gotten long down here in that demand zone and then target the range high to cut the trade there. But ultimately, I'll just get rid of it now. So we did in fact chop around in the upper half of that range. But again, I would have been fine taking a long within that range because your invalidation was quite clear in my opinion. It was the range EQ. So on account that we had reclaimed the range EQ here, you'd look for longs at the range EQ. You would either target the range high or you'd be anticipating a break above the range high and further continuation. But the most critical part being a loss of the range EQ is your invalidation. So if you had long near the range EQ, you had your target set, you had your invalidation just slightly below the EQ, you'd have an R&R of 3 or 3.5. You ladder some of your sells off at the range high, leaving some for a potential breakout. And then you get stopped out on account that we lose the EQ. Or after we got this first push here, you could have moved your stop up to break even and you would have got stopped out even sooner over here just above the EQ. So I know it's all great and it's easy when you're talking about hindsight. But again, it just goes back to that chop that I wanted to see within the range for a potential trade setup with a clear invalidation that did get lost. But it's just good to have different perspectives and use various factors towards your TA to see the clearer picture, whether it was the wedge that I had previously covered or whether it was this horizontal range. When you started seeing all of these liquidity traps here and multiple swing fail after swing fail, clearly the resistance is strong. For me, the critical point was right here. When we saw this consolidation right here after a decent buyback, that is where I wanted to see the breakout. That's what made the most sense to me at the time. But on account that we swept this low again and had another SFP with an aggressive sell-off here, the signs were all there that this was likely to break down. Then of course we break down right to the range low there. We had some bearish consolidation here. Also another bearish rising wedge off of a dump, a furthered dump, breaching the range low. So at that point, range low is invalidated. Even though we did come up, we tested that range EQ again. But at that point, on a high time frame, the move is essentially over. And then of course we trended all the way down to that gap, as you know, testing 3 cents. So there's many different ways of looking at it. It's good to start off with high time frame. Get your key levels set first, drill into the low time frame after for those setups, and stick to it. If you make yourself a rule, stick to the rule. Stick to your invalidations. I got people telling me that it was not possible we'd come down to 3 cents again or lower. And even myself started to question it, but I stuck to the trade plan. I tried to use as many different perspectives as I could see it. Drilling into the low time frame. How is this going to break down if it is? High time frame, coming up with my criteria, why it should break down. And then honestly, from that point on, just watching price. So that's it for the low time frame. I just wanted to cover that as well. I think it was important to recap that analysis again from that prior video. I've already covered the high time frame structure that I want to see held, but keeping in mind the potential for further downside before we get our next leg up. And I don't think Gala is going to be too different from the altcoin market in general, meaning a lot of other alts currently have this similar structure printed. As an example, here's Phantom, similar structure. Another example, here's One, similar structure. Another example, GRT, arguably even Solana, VRA even, VRA, after a major pump. So my point is, all boats float with a rising tide. And I think that if we're going to get another leg up, we need to see it from Bitcoin and Ethereum and an altcoin market as a whole. So I'm carefully watching Bitcoin and Ethereum, but I think we've got a really interesting month ahead of us. Thanks for joining, everyone. Hopefully you found this video helpful. If you enjoyed it, please give it a like. If you're new, don't forget to subscribe, and we'll catch you soon.